Many people have heard of Swiss bank accounts, offshore accounts, and other tax havens. However, the legality of stashing money in a bank in another country is often questionable. Generally speaking, depositing funds in a financial institution in another country is not usually illegal. Likewise, it is typically legal to put money in an account that is offshore, just as it is to put money in a bank in a country that is landlocked. Many people prefer to bank in other countries for various reasons. Foreign banks have their own banking rules that are a mixture of the bank's internal policies and the regulations of their own government. Additionally, the Organization for Economic Cooperation and Development and the World Trade Organization have additional regulations that pertain to banks that accept funds from foreign banking customers. Swiss bank accounts. Historically, Switzerland was a country that many people favored to put their wealth due to strict privacy laws in place in the country. Sometimes accounts didn't have names attached to them, which made it easier for bank customers to conceal these accounts. However, Switzerland has agreed to provide foreign governments with information pertaining to their account holders, which has effectively ended tax evasion that may have transpired when the account owner failed to disclose its existence. So why do people even use offshore accounts? There are many reasons why people may use an offshore account. Some of these reasons are legitimate, while others are not. For example, the tax rate in other countries may be less than it is in the United States, so a person may wish to hold funds in the other country and may be able to do so legally. However, in other cases, a person may try to place funds in an account in another country to avoid disclosing its existence to the United States, to avoid paying taxes on it, or to conceal funds that were illegally acquired, such as through criminal activities. Some tax haven countries do not comply with tax disclosure rules and may help conceal these accounts. However, failing to disclose accounts can be illegal in many cases and can result in serious criminal and civil penalties. Benefits of using an offshore account. There are several legal advantages to using an offshore account. For example, many countries allow bank customers to earn money tax-free. Customers may be able to legally avoid paying capital gains taxes without breaking the law. Certain states in the United States are considered tax havens and hold a considerable amount of foreign funds. One reason why some people use offshore accounts is due to their stability. They may be concerned about the political certainty of their country, and their home country's economic stability may be questionable. If the country experiences a change in political regime, a civil war, devaluation of their currency, or other political or critical event, their money may be in jeopardy. An additional consideration in some cases is the ability to invest funds held in an offshore account or in foreign investments. These opportunities may not always be available when all money is in one form of currency in another country. Another term used in this context is a tax haven or shell company. These havens attract investors due to lower tax rates and special exemptions. Here are some of the top tax havens in the world. Bermuda. Declared the world's worst, or best if you're looking to avoid taxation, corporate tax haven in 2016 by Oxfam with a 0% tax rate and no personal income tax. Netherlands. Most popular tax haven among the world's Fortune 500. The government uses tax incentives to attract businesses to invest in their country. One such tax incentive cost an estimated 1.2 billion euros in 2016 to the Netherlands. Luxembourg. It gives benefits such as tax incentives and 0% withholding taxes. Cayman Islands. No personal income taxes, no capital gains taxes, no payroll taxes, no corporate taxes, and the country does not withhold taxes on foreign entities. Singapore charges reasonable nominal corporate taxes. Reasonable corporate tax rates are provided through tax incentives, lack of withholding taxes, and what appears to be substantial profit sharing. The Channel Islands. No capital gains taxes, no council taxes, and no value-added taxes. Isle of Man. No capital gains tax, turnover tax, or capital transfer tax. It also imposes a low income tax with the highest rates at 20%. Mauritius. Low corporate tax rate and no withholding tax. Ireland. Referred to as a tax haven despite officials asserting that it is not. Apple discovered that two of the company's Irish subsidiaries were not classified as tax residents in the United States or Ireland despite being incorporated into the latter country. Famous companies that benefit from tax havens. 1. Apple. The amount booked offshore is $214.9 billion. It uses Ireland as a tax haven. Apple would have owed the U.S. government $65.4 billion in taxes if tax haven benefits were not used. 2. Nike. It holds $10.7 billion offshore. It uses Bermuda as a tax haven. It would have paid $3.6 billion for taxes if tax haven benefits were not used. This implies Nike pays a mere 1.4% tax rate to foreign governments on those offshore profits, indicating that nearly all the money is officially held by subsidiaries in tax havens. 3. Goldman Sachs. It holds $28.6 billion offshore and uses Bermuda as a tax haven. 4. Some of the 50 biggest U.S. companies that have stashed approximately $1.6 trillion offshore include Microsoft, IBM, General Electric, Pfizer, Exxon, Mobil, Chevron, Walmart. These 50 companies earned over $4.2 trillion in profits globally, but they used offshore tax havens to lower their effective overall tax rate to just 25.9%, which was well below the U.S. stationary rate of 35% and even lower than the average levels paid in other developed countries. While it is not illegal to establish an offshore bank account, it is illegal to hide assets in these accounts in order to evade tax obligations. Banking institutions are required to report balances and activity of citizens to the Internal Revenue Service. The United States currently has agreements with more than 100 countries in which they agree to report banking activity of U.S. taxpayers. Some violations of tax laws can result in the IRS seizing up to 50% of the balance in the bank account for every year that the account owner failed to report the bank account. Individuals considering opening an offshore account should discuss this information with an experienced lawyer who can provide them with the proper advice.